An $11 trillion asset manager, Vanguard, just flipped on crypto, opening the door for 50 million investors to jump in. By the time we're done here, you are going to understand exactly why this massive shift happened, and more importantly, the smart way to think about it if you're considering getting in.
Yeah, you heard that right. $11 trillion. That is the sheer size of the company that just did a complete 180 on crypto after spending years telling everyone it was too speculative.
And with the flip of a switch, a staggering 50 million of their clients now have direct access to buy ETFs for Bitcoin, Ethereum, and other major cryptos. This isn't just a small policy change. This is a seismic shift in the world of finance.
Okay, so big numbers, big news, but why should you care about this, like right now? Well, because if you're a millennial, you're probably feeling the squeeze, and this move just cracked open a new door for building wealth, though it definitely comes with its own risks.
I mean, let's be real for a second. So many of us are juggling salaries that just aren't keeping up, while also staring down our piece of that $1.7 trillion mountain of student debt. Tack on housing costs that are just out of control, and it's no wonder traditional investing feels like a game we can't win. This is the world this Vanguard news just dropped into.
All right, so this is the real question, isn't it? Why did Vanguard, the titan of slow and steady conservative investing, suddenly give in? What could possibly force their hand after all those years of bashing crypto?
And check out this timeline. It shows just how whiplash-inducing this U-turn was. For years, Vanguard's official stance was basically that crypto was digital smoke. But then, their competitors started making moves, and the pressure just became too much to ignore. Then, on December 2nd, the script got flipped completely.
And here's the number one reason why. $70 billion. That's how much money poured into BlackRock's Bitcoin ETF alone. Vanguard basically watched its biggest rival print cash and knew it was being left in the dust. The demand was just too big to fight anymore.
You know, this also completely changes how people can get into crypto. The old way, you had to mess around with these sometimes shady, unregulated online exchanges. The new way, you can buy a regulated fund on the exact same trusted website you use for your 401k. For anyone who's been cautiously watching from the sidelines, this is a total game changer.
And having that safety net is a bigger deal now than ever. Let's not forget, the crypto market just saw a $1 trillion wipeout since October. That kind of insane volatility is exactly why having a familiar, regulated way in through a company like Vanguard is such a massive deal.
But here's where the story gets really interesting. This wasn't just about market pressure or keeping up with the Joneses. Nope. There is a twist to this story that almost nobody is talking about.
So you have to ask yourself, did Vanguard, the most conservative player in the whole game, really change its entire philosophy just because of a little FOMO? Or was there something else happening behind closed doors?
And boom, here it is. The real story. Vanguard's brand new CEO is a guy named Salim Ramji. And what was his last job? Oh, just being the head honcho at BlackRock, who literally launched their record-shattering Bitcoin ETF. So this wasn't just a pivot. This was an inside job, a calculated move to bring an old-school giant into the 21st century.
And the potential impact here is just staggering. If a tiny, tiny fraction, just half of 1% of Vanguard's money shifts into these new crypto ETFs, that would be a $55 billion flood of new cash into the market. This one leadership change could unleash an absolute tsunami of capital. Okay, so we've covered the why. Now let's get down to brass tacks. How could you, as a regular investor, think about this new opportunity in a smart, safe way?
So, first off, what even is a crypto ETF? Honestly, the easiest way to think about it is this. You're basically buying a tiny piece of a super secure vault that holds all the actual cryptocurrency. You get all the exposure to the price changes without any of the headaches or the risks of managing your own digital keys.
Now here is the single most important rule of the game. You start small. I mean it. We are not betting the house here. Think of crypto as just a little pinch of spice in your overall portfolio, no more than 1 to 5%. The other 95%, that stays in your boring, reliable, traditional investments. So what does that actually look like in real money? Well, let's say you make around $50,000 a year. That 1 to 5% allocation means you'd be putting in somewhere between $500 and $2,500. It's a manageable amount that's not going to wreck you if things go sideways.
So here's your simple 3-step game plan. Step 1, stick to that 1 to 5% max. Seriously. Step 2, don't put all your eggs in one basket.
diversify across a few different crypto assets. And step 3, set some rules for yourself and actually monitor it. This is not a set it and forget it kind of investment.
And just to give you a quick idea, and remember, this is not financial advice, it's just an example. You could put the biggest chunk, maybe 60%, into the big one, Bitcoin, then 30% into Ethereum for its different technology, and then maybe the last 10% you could sprinkle between some other promising projects to spread out that risk.
So after all that, the drama, the CEO twist, the wild market swings, what's the one big thing you really need to take away from all of this? It's this right here. Crypto is no longer just some weird, fringe asset for tech geeks. Vanguard's move just gave it a massive stamp of legitimacy. It's a signal that digital assets are now a small, but probably permanent, piece of a modern investment portfolio. But, and this is a really, really big but, you absolutely have to respect the risk. Prices can swing more than 20% in a single day. This isn't a savings account. It's not FDIC insured. And, like any investment, you have to be okay with the potential of losing everything you put in. Go into it with your eyes wide open. Look, at the end of the day, Vanguard just kicked down a door that's been locked for millions of everyday investors. The question now is, how are you going to walk through it? And of course, a quick reminder, this content is for educational purposes only and does not constitute financial advice. Past performance is no guarantee of future results. Always do your own thorough research.